welcome to Building Tomorrow's Insurer, the podcast where we explore the future of insurance through the lens of technology and innovation. I'm your host, Nigel Fellowes-Freeman, the founder and CEO of Kanopi, and today we are joined by none other than Steve Tunstall, who is a board chair, risk expert, founder of Parima.org and Inzsure, a man with an enormous amount of experience in the sector. In fact, I think it's 3 decades across Asia and globally. I had a bunch of leadership roles in companies like Cathay Pacific, who many of us jumped on a plane. In fact, my parents just flew across the world on Cathay over the last couple of weeks, and Jardine Pacific, where he tackled everything from risk management to business transformation. So, Steve, it is wonderful to have you here. Thank you so much for joining us today.
Thanks very much, Nigel. Great to be here. Looking forward to the conversation.
Yeah, I think the conversation is going to be a very honest one, very forward-thinking one, looking at trends, challenges, and definitely the opportunities that are shaping the future insurance. And I know you're slap bang in the centre of that and have a bunch of views and opinions, and I'm really looking forward to understanding how you think about the world. And so maybe we can start there. And I think the start of a story is always good to start at the beginning, and the beginning often is the start of your life. I think that's very formative in terms of how people think about the world, how they think their careers evolve. And so, would you mind turning back the clock a little bit for us, Steve, and taking us back to kind of your start in your career, how you progressed, what kind of were the formative years for you and your movement into the insurance industry?
Well, I'm an engineer by background. My first qualification was in mechanical and electrical, and then I moved into contract management, project management, running pretty large contracts in the UK. And then I did a master's in project management and ended up basically running companies in that space. So I came to Asia over 20 years ago, as you say, and my first significant role here was in Singapore as the managing director of Schindler Lifts. So fairly big operation here, lots of lifts, lots of escalators, very engineering focused, but projects and operations. So quite a mix of different things. But I've always been interested in stuff going wrong. So before I did roles like that, I was always a bit passionate about risk management. How do we think about what can go wrong? Less from a pure health and safety point of view, although that's important, but much more from what makes businesses go bust. And that aspect has always been something that fascinates me. And I think as we've gone through the years, we're seeing that accelerating over the years. There's much more chance of companies crashing these days than there was at the start of my career. So it's an exciting time. It's a thrilling time, but let's see how it plays out. I think there's going to be a lot of change coming down the path.
Yeah, there's a lot of chips to fall, and it's definitely out to be seen and where those chips are going to fall. And one of those, I suppose, chips being played, and you've spoken pretty extensively on this, and it's something that actually we think about a lot here, which is the protection gap. And the protection gap in Asia, obviously where you kind of done a bunch of your work, is growing as it is in the whole world, really. And in Australia, I suppose there's a little bit more uptake generally of insurance, I think, in terms of penetration compared to a lot of Asian markets. And so, have you got any ideas? I'd love to get your thoughts on why do you think that's true? Do you think that disparity does exist? And if so, and how are you thinking about the market and how bringing insurance solutions to people, businesses in Asia to try and shrink the protection gap is important?
Yeah, well, after I left the role at Schindler, I then moved on to do all sorts of risk management roles across Asia. I was the head of risk for Cathay Pacific. I was the head of Genting. And then about 10 years ago, with a few other instigators in the industry, we decided to set up a risk management association right across Asia, which is Parima.org that you mentioned earlier. And a big part of that was recognizing that in Europe, where I'm from, in the US, and in Australia, the markets are much more mature for big corporates, never mind for individuals or SME. And we felt we wanted to do something as a group to just promote insurance a bit more and the potential that good risk management practice can bring to make your company more viable and survive for the long term. Um, and what's been interesting is over those years, we set up Parima about 12 years ago now, and I still have an executive role there. We are seeing improvements, we are seeing changes, but it does seem as though there's still a long way to go. And we can drill into this a bit more later, but I also spent several years trying to set up a startup to try and deal with SME insurance to try and improve that. And I think it's a long and complicated journey to try and understand why the protection gap is so wide in Asia. Um, I think you nailed it earlier. Things are a little bit more mature in Australia, but having said that, there's still a lot of issues, and arguably the wheels are going to come off fairly soon because some of the stuff that's covered is just not viable from a pure commercial basis in the long term. And I think that's that's been part of the problem in Asia. I guess the difference between a lot of Asian jurisdictions and Australia is that although the industry is regulated in every country, sort of there are some jurisdictions in Asia that have been quite heavy-handed with that regulation to the point of protecting those markets from outside competitors. And to be fair, Australia does that a little bit as well, but in Asia, that's been quite detrimental. It's made a bit of a boys' club, and the boys' club loves selling life insurance because that's the most profitable thing to sell. But they're actually less interested in selling the stuff that can really change people's lives. And that's, property insurance, health insurance, those sorts of things are the real change agents. Um, and over the years, I would say in multiple jurisdictions across Asia, and I'm not talking about the more mature ones like Japan, Korea, Hong Kong, and Singapore. Some of the less mature ASEAN countries, Singapore's insurance has got a bit of a bad rep, to be honest. I mean, there's been mis-selling incidents. There's been, problems where people don't get their claims paid or they perceive they don't get their claims paid. So the uptake overall across the region has been lower than it could have been. Of course, the CEOs and the boards of the insurance companies don't really care that much because they're still getting increased profit every year, increased turnover every year. Even though they might be fighting for the same market share rather than increasing the market share exponentially, they can still do enough to get their bonuses. So they're not that excited about rocking the boat too much. That's just the reality of where it is. But when I started my startup to try and look at how we could change that, particularly for SMEs in Asia, one of the things when I went around and talked to the regulators, it's just vivid how big that protection gap is in some countries. So one of the senior people at Bank Negara Malaysia told me they think something like 97% of their SMEs have no insurance. Now, of course, a lot of these are mom and pop shops and roadside stalls and all the rest of it. But so far as I'm concerned, that's even more important because that's their family business. And if their little stall burns down because the propane burner blows up or something, that's them going to be, destitute as a family because they don't only lose their little stall, but they're going to lose their income and livelihood for a long time. So I was quite passionate in trying to work out how to change the system, buck the system, and I think this will change and it will improve. But quite honest, my little business was a little bit too early, I think. So I'm a bit too early to make an impact, but I'm sure someone will make a difference in the future.
When you were saying early, was it like risk appetite from the capacity? Was it um, distribution challenge in getting in front of those SMEs? Was it uh, pricing? Was it like was there any particular things that you can identify that you're like, this is why we're early. This is why actually kind of getting kind of market penetration was tough.
Yeah, I think distribution is
Mhm.
the key factor for those little guys. It's getting to them It's overcoming their skepticism. It's building their trust. It's communicating why this is a good thing, why it's meaningful. And this is always the problem with insurance everywhere. You know, you buy an insurance policy because you have to. You buy an insurance policy because you're sold it. You buy an insurance policy because your wife nags at you till you get it. It's not, there's no, you know, it's not a Maserati. There's no new car smell. There's no feeling of luxury driving at, top speed down the highway once you've got it. It's just the money goes out and then you hope you never hear about it ever again because that's a win, you know? So those aspects make this a really pushing water uphill experience unless you've really nailed that distribution. And I think distribution is the absolute key. If you can bring customers, then the markets will come, the capacity will come, the availability will be there. And if you can deliver using technology, even better. But if you can't nail that distribution aspect, then you're not gonna get so far. And it was my lack of confidence that I could really sort that out properly that, quite frankly, stopped me taking a lot of VC money on offer. There was a lot of VC money floating around back a few years ago for exactly this sort of thing. And I could have quite easily taken that, but it's that old thing of if you're going to get on that tiger's back, you better be really sure you want to stay there for the long term, because if you fall off, the tiger eats you.
Yeah. Holding onto the tail of a big tiger is no, is not a fun experience. I want to continue to pull that thread, if that's okay, on the embedded side. This is something that we obviously think a lot here, and totally agree with your view of the world here on distribution being critically important. That's not to say every other part of the value chain is not important in making the distribution work, because it has to. The price has to be right, and the underwriting has to be good, and the claims experience has to be great. So all of those pieces are really important, but you do have to have a go-to-market motion that is effective. And specifically in Asia, I think there's a few examples. Obviously, Alipay does a pretty good job of having a big user base and then exposing that to products contextually. Songman does a pretty good job here as well. And so, do you want to touch on that? Because I think the converse might be true in some ways, in which actually Asia on the micro insurance embedded side, I think it's actually probably leading the world and leading the charge in some ways. And so, can you kind of talk to that in terms of real kind of diversion that they're doing great in this kind of micro embedded stuff, and how you think they've managed to get to scale and get the executives to buy into it?
So that's essentially down to technology leapfrogs, in my view. If you take a more mature market like Australia, the US, the UK, everybody's got banking, everybody's got functional financial services of one sort or another. And it might be they complain that their local branch is being closed down, or it might be they complain that they can't find an ATM at the right time. But in Asia, there's a large number of populations that never had those experiences anyway. So they don't miss them because they weren't there in the first place. So they've leapfrogged straight from a cash economy, or in some cases a barter economy, straight from that QR codes for payment. So you've immediately got that situation where people are now using their smartphones for payment, for transfers, and everything else. And these are people in their 50s, 60s, and 70s. So lots of places in Asia, you want to buy your durian at the roadside shop, you better be ready to scan the QR code and pay by pay now, because the lady's gonna look at you crazy if you try and give her cash. So this is right across Asia now that people have leapfrogged that old bricks and mortar financial services process straight into technology only solutions. So then it's a relatively straightforward step to build on the back of that and say, by the way, unless you uncheck this box, which is hidden somewhere in settings, you now got $2 worth of insurance on the back of this as well, sunshine. So, and then they probably don't notice that most of the time, until something awful happens, and then they get an instant payment straight into their bank account. They're going to go, well, that was really cool. I didn't even know I'd paid for that. Um, so I'm paraphrasing and shortcutting on the whole process, but you can see how people who actually are completely disinterested in insurance would take an experience like that as a real good learning point and a real beneficial point. Um, and that's something that's played out a lot across Asia, because even in the more mature markets, there's a lot of people who do all their financial services and insurance services online. So it's much easier to convince even the boomers and the Gen Xers that this is a logical way to do things, and it makes a lot of sense.
Changing, changing behaviour is tough, isn't it? And so if there's been standard ways of users interacting with services, when you change that as an alternative, it's there's friction there. And like you said, if there's been no previous alternative, then this is the only way, then that friction doesn't exist in terms of changing a current behaviour. It's just a completely new one. And do you think that the scale of Asia also helps in that the price point to be so aggressive because the scale is so great, and therefore there is very little price friction as well because the size of the portfolios in terms of pure transaction volume of number of people using the services um, helps too in terms of portfolio spread and scale, which can kind of really impact the aggressiveness of pricing.
Yeah, definitely scale is a huge factor, probably the
Mhm.
biggest factor, but it's not the only one. Uh, the other aspect is by its nature, the I mean, I don't want to be critical of the regulatory systems across Asia, but they tend to be a little bit more behind what's happening in the field, particularly with new technology solutions. Most regulators are struggling to catch up with that a little bit, and that means by default they end up with a bit of a light touch, whereas more mature jurisdictions are more looking to add layers of bureaucracy, to add layers of perceived protection, which can actually make it quite hard to move quickly, can make it hard to produce a nimble solution and get it to market. Whereas in Asia, a lot of these technology companies really what's the expression? They seek forgiveness after the fact rather than ask permission beforehand. Um, they get something out there, it's successful, then they go back to the regulator and say, "Hey, we're doing this. Is it okay? We've only got 1 million customers. They seem happy. What do you think?" Um, you know, so that sort of process, and again, I'm just generalizing and shortcutting for example's sake, but that does seem to be a more regular process. Of course, sometimes the regulator comes back and says, "No, we're not happy. You need to stop right now." But it tends to be that way round rather than the other way round in a lot of jurisdictions.
Part of that you just mentioned is staying relevant. Staying relevant seems to be more and more of a challenge. And you mentioned at the top of the conversation that no one's excited really to buy an insurance product. You don't wake up in the morning thinking, this is something that is important to me. It's generally sold to you and often sold out of context. And so I think insurance can be a risk of falling behind. And specifically, large insurers who have done things a certain way for a very long time, I think those incumbents are at greater risk because they've got inherently people and processes and technology that make it harder to evolve and change. Do you think that we are in a period now in insurance that is changing faster than ever? Or do you think that actually in every technical revolution over time, they've always thought this, but actually we're just another phase that's happened, as has happened for the last many hundred years. Do you think that we're in a different phase of acceleration within the insurance sector, or do you think we're just kind of continuing on the path of change that as insurance has evolved forever?
Yeah, it's a good question, and of course, it's a very complicated answer to that. I mean, firstly, I think we all have to recognize that, insurance is sort of the Cinderella of financial services. It never gets to go to the party sort of thing. It's always left at home sweeping the hearth. Um, and it's big. It's so big that people don't realize that the insurance sector overall, depending on how you measure it, is actually bigger than the rest of financial services put together by some measures. So it's a massive behemoth of a thing. But it's also very, very diverse. It's very complicated because let's be quite honest about it, it does get a bit of a bad rap. I mean, I see the CEO of Goldman Sachs getting assassinated or that. But let's be realistic, that's a shocking and terrible thing, and it's a horrible tragedy. But it's reflective of the dark side of insurance. It's reflective of what people think about the industry. And on the one hand, we've got all these products that are arguably not beneficial to individuals. So I get into trouble with my friends for saying this, but I don't particularly like death insurance because I think death insurance is a sort of pointless product. I'm guaranteed I'm not going to get the benefit of death insurance because I'm dead, you know? So so why would I buy that? And the answer is you wouldn't unless the agent is getting like the first 6 months premium in their back pocket, and that means they have the incentive to sell to you so hard you're going to get something whether you like it or not. It's don't you love your grandmother sort of stuff. Don't you love your family? Blah blah blah. So you've got that one aspect where, quite frankly, even today, the selling aspects can be quite problematic. And then you've got the other aspect, which is, we can see this playing out right now in LA with the fires. Those people who've had their insurance cancelled, this is life-changing experiences on many, many levels, and they didn't expect it to be life-changing on a financial level. But if you don't have insurance when something like that hits, then it is genuinely going to hit you very badly for the rest of your life. I don't care how rich you are. Um, Whereas that's, for me, the perfect example of when insurance works well. If you lose the whole of your property and your insurance kicks back in, it's no consolation, of course, if you've lost loved ones or possessions and other things that you value. It's a devastating experience, but at least you can get something to put your life back together again. And that's a very powerful tool to have in your toolbox as an individual or a corporation. So I think you got these range of extremes in terms of how insurance is looked at by the buyers, by the customers, and I'm most interested in the customers. I think what's interesting is that a lot of the industry, as you alluded to, has been quite resistant to change. And we can go into the different types of organizations and why they haven't changed. But I think there's been a perhaps unrealistic expectation on the part of the startup community and the venture capitalists that they're going to, and quite frankly, quite a few CEOs, that they're going to, create this incubator, they're going to create this model, they're going to, infect the whole organization with a startup vibe, and everybody's going to be sitting on bean bags and playing crazy golf at lunchtime. Um, and of course, to your earlier point, insurance companies have been fighting off this sort of nonsense for 200 years. So they're the brilliant antivirus internally. They've got all these antivirus protections that kick in. And of course, it's easy enough for a lot of people in these departments just to hunker down and wait till that CEO gets rotated out or fired. And then they can just carry on like they were before. Thank you very much.
Yeah, I spoke. We had Jeff Shee on a podcast recently, and he was of the view that um, his call was that there'd never been a insurer that had entered the Fortune 500 had ever left. So once they were in, not one had disappeared. I think AIG may have been the only one because they got some leverage with some CDOs. But otherwise, Jimmy, once you've been in, you've got you stay in. And his view was that he thought that we might see in the next decade a couple of those not be there, cease to exist, or at least get into a lot of trouble. Would you agree with that perspective of we're in a decade where there could be that kind of scale of change, or like you just mentioned, actually they're big sustainable businesses that will just continue to grind through the change?
Yeah, I think actually you can say that almost about any industry, that the biggest once they're up there at the top, it's difficult to dislodge them, because
Yeah.
what happens is that even if one of them starts to massively underperform, then they just get taken over and rebranded. So, and you sometimes you don't necessarily lose the brand. Yeah, I mean, look, I mean, arguably, I don't know the I don't know the backstory on any of these, so I'm just shooting the breeze, and I have nothing to blame or claim. But if you look at like what was it, AXA and Excel? Yeah, as I saw that, that was a lot of people said Excel were doing really, really well, but AXA were not doing so well. So even though that part of AXA stayed as AXA, it was really a reverse takeover by Excel Catlin that then breathed a new breath of life to that AXA business. That's the impression I got. Um, and then I think the Ace Chubb thing was along a similar sort of line. I think, to be fair on that one, Ace and Chubb were living in slightly different universes. There was less overlap of the Venn diagram, but I still think it was that idea that Chubb got revitalized by all the new ideas and information, and quite frankly, top management that came in from Ace. And Ace disappeared. So the brands do go, but logically, why would you dump your best name brand for a brand that no one's heard of? So that's why we still have Chubb and AXA kicking around. But yeah, I mean, this is just me shooting the breeze because I thought you raised an interesting point. But you look at most industries and you see that, and I guess, again, the classic one in insurance is the brokers. Marsh, the Aons, they just get bigger and bigger, and that's because they hoover up anybody else in a market who they think is potentially competitive, where they can take them over.
Handship power there to be able to stand up with competition, not when it's big enough that it'll get pushback from a regulatory perspective, but small enough that they can just hoover up, get the profit, get the profit pools into their business. That makes interesting sense. Steve, I'd love to just take a step left, and I suppose it's potentially somewhat in line with the Californian fire situation that is currently ongoing. But that's fine. There's a broad brushed impact that it's going to have on me, and that lots of CEOs are talking about, are thinking about, is an important part of when you look at any annual report, what the strategic documents calls out, like climate and climate change is on the tip of everybody's tongues, really. And so I'd love to get your perspective, and maybe kind of specifically an Asian perspective, around NatCat risks, around profitability concerns. Obviously, there's we'll hopefully maybe we'll go into it, just touch on it, the potential knock-on effect of this massive loss that's going to occur in the US today, in the current through the current wildfire. But I'm just going to maybe we'll start on the Asian market. I'd love to get your view on the climate crisis and how that's impacted in the market.
Yeah, so I think it's a massive issue. It's a personal passion of mine. I've spent quite a bit of my time over the years doing things like projects for ADB, things like I'm on the board of Zero Waste Singapore, and I'm quite a passionate advocate for the fact that we need to change the way we live, basically, and we certainly need to change the way we measure performance of our top executives, not happen on what happened in the last quarter, but what happens in the next quarter century. These things are quite important when you're looking at corporate sustainability. It shouldn't just be, did we make our numbers in December and rip a few people who are then going to hate us next year? I think that's a very common approach by a lot of C-suites. And I think it's very problematic when you're faced with something like climate change because it's a slow burn. You know, I mean, again, we've seen 2024 was the hottest year on record ever. But if you talk to scientists, and I do regularly, 2024 is going to be the coolest year for the next 50 years. Okay? So that means that it doesn't really matter what we do now. We're on that trajectory. We've now passed the 1.5 degree, and you know, a few COPs ago, before COPs were taken over by the petrochemical people, we were saying 1.5 is as far as we should go. Well, we've already passed that. So I think the context is we ain't seen nothing yet in terms of NATCATs. This is really just touching the surface, which is not to belittle it for the individuals and families and companies that have been hugely affected in recent years. But I think we have to realistically face the fact that this is just the beginning. We're not seeing the true impact of the climate change that we're experiencing. So how does that play across Asia? Well, quite frankly, very, very badly. The area that Parima covers and the area where I live and work is over half the world's population. It's over half the world's GDP growth for the next, you know, certainly our lifetimes. Because Asia is the future. But at the same time, if you took a list of the top 50 cities, I would say 30 plus are coastal based. And of those 30 plus, if you rule out, you know, Shanghai, Hong Kong, Singapore, one or two in Japan, one or two in Korea, then the rest of them are highly vulnerable to sea level rise. They're highly vulnerable to increasing NATCATs of any type, whether it's, you know, storm surge or typhoon type related. And I think we're going to see the fact that there are very, very large vulnerable populations across these countries as well. What we've seen start to play out in Europe and to some extent in USA is serious levels of migration. I think that's nothing compared to what we might face in Asia once serious NatCats kick in. So I think there's a massive underlying issue here that we're only really starting to see play out. And of course, you know, Australia is not accepted from this either. It turns out there are many low-lying areas that are susceptible to sea level rise. There's many areas susceptible to changing flood and weather patterns, and of course wildfires is the converse of this. The biggest thing with climate change is that we get more water where we don't want it, and we get less water where we do want it. I think, broad terms, those are going to be the biggest impacts that hit us as we go forward.
And when we think about insurers, reinsurers, and governments and their requirement to be involved in this, it feels like it will be tough for carriers and reinsurers to carry all of this bag, and it feels like it needs to maybe have kind of government and policy involvement in. Have you got a view on that in terms of let the market play and let it play out in terms of who can and who can't get insured and protected in the places they need, even though exposure increases, or kind of you more of the viewpoint that kind of there needs to be government intervention, there needs to be policy, and there needs to be what if there needs to be a mix of the two? How do you kind of think about that?
Well, I've done. I mentioned earlier I did quite a bit of work on and off at ADB, and it's interesting to me. Part of my passion is seeing where can we make a difference now, where are we going to have to make a difference in the future. And I did a couple of projects specifically around the Pacific Islands, and I think the Pacific Islands are, for want of a better phrase, the canary in the coal mine for the rest of us, really. Because as I'm sure you're well aware, many of those Pacific Islands are already facing dramatic impact from climate change. It's having a huge impact on their ability to protect themselves, to recover after incidents, etc., etc. To the extent that I think we're now at the point, and I may misrepresent this because I'm not an expert totally on this, but I think all the big international insurers have now exited the Pacific Islands. I think the last one for commercial insurance was QBE. And they've now sold their last business. So pretty well all the Pacific Islands are down to their local resources now in terms of what they can do. And quite frankly, they can't do very much. They can't provide the protection that's needed. And we're seeing political expediency becoming an issue in some of those markets where they're now saying, look, we don't have the market, we don't have the capability to protect ourselves, so it's all your fault. So we're going to blame Australia, we're going to blame New Zealand, we're going to blame the West and say, okay, whenever we have a problem, it's your problem now. You come and fix it. Insurance has failed. And I think we're going to see that sort of approach stacking up more and more because it's clearly unrealistic to expect commercial insurance markets to work in an area where they can't, they're guaranteed not to make a profit. So what's the money going to do? It's going to walk away. If you can't make a profit and you believe you've got no chance of making a profit, why would you bother? And I think that's played out already in the Pacific Islands. That's now history for those islands. And we have an insoluble situation over there. What we need to be careful of is that it's going to increasingly play out for NATCATs as well. I mean, I heard Andreas Berger, the global CEO of Swiss Re, speak very eloquently here in Singapore last October about the fact that, and this is pre-California fires, but he said the last 3 years are the first 3 years on record where there's been over 100 billion in NatCat reinsurance losses. And he's got all the charts, he's got all the history. You can see it getting worse and worse. And he very eloquently explains that's the data. The data is correct. This is where we're going, et cetera, et cetera. But at the end of his presentation and my other presentation of people at that level and of that statue, I always end up finding myself saying, so what? So what are we going to do? So how are we going to deal with this? Because the reality is, if we leave it to the commercial markets alone, then it ain't going to get fixed because that capital is going to walk away. So there is no doubt in my mind, the only way this can be fixed is through public-private partnerships. And let's be realistic, if you look at the solutions in Europe, the solutions in the US, they're very heavily dependent on government support, government structures, and government stepping in to sort things out. I expect very similar things will be required right across Asia. But this doesn't mean that commercial insurers don't have a role to play. Quite the reverse. Commercial insurers have the expertise, they have the knowledge, they have the underwriting capability, they have the claims capability. So they should definitely be a big part of this process, but they can't just be expected to provide the capacity. This is not a sort of, if there was more transparency, the capacity would flow in situation. Yeah. This is an existential crisis. And what I don't get from the insurance industry is that they should be clamoring now for governments to really listen to them, to be able to build something together. There are odd pockets of good things happening. There's a really good solution in the Caribbean called CRIF. I saw a really interesting solution as well between the Red Cross and Aon the other day, when the Red Cross experience a certain amount of losses, they now have a policy that kicks in. And for someone like the Red Cross, buying insurance has to be a very, very conscious decision, because it's like, do I buy more stretchers and bandages, or do I buy insurance? So they really have to understand what they're doing and why they're doing it. And they obviously think it's a good thing because they've got these policies in place now. So there are pockets of excellent behavior in this space, but oh my goodness, there's billions who are going to be needed in the future, and I don't feel the insurance industry is doing anything like enough to sound the alarm. And if we're not careful, we'll get blamed. You know who's getting a lot of the blame in California? It's going to be the insurers. Why don't you have the protections, etc., etc.? Well, they cancelled my cover last month. They flew a drone over my house and said I had a tile loose, so they cancelled my policy, and then the whole thing's burned to the ground. So behaviours like that are going to really damage the reputation of the insurance industry further in a way that it really can't afford.
Yeah, totally. And Steve, maybe just a little bit specific on the reinsurance market and obviously the enormous losses that are going to be felt in California. Do you think that's going to have a direct ripple effect on the global insurance market in terms of reinsurance costs and therefore cost to the consumer? Do you think there'll be a direct line that we'll be able to draw in terms of from this specific loss to a trickle down effect in the reinsurance market?
Absolutely guaranteed. It's like you said earlier, there's only a couple of dozen big insurers on the planet. If they all lose money in California, then guess what? Rates are going up in Sydney, rates are going up in Singapore, rates are going up in Belfast, wherever it is. They'll get that money back, or the C-suite will lose their jobs. Simple.
I completely agree. I'm going to test your thoughts, but I'm in absolutely the same camp. And I think a lot is to play out there. We'll see, and it may be an instance that does kick a lot of folks into action. We'll see. Obviously the scale of loss, etc. But it may be an instigator into some change. And maybe that's a nice segue, Steve, into you've. I was reading some information and some content you created, and I thought one thing I wanted to go into a little depth of was that you've highlighted these two types of insurtechs, one being a transformative one and one being a tinkerer. I love the word tinkerer. It's like what it kind of brings in your mind in terms of the insurtech seeing a home and thinking around how things could change. But can you go into that a little bit more depth in terms of the big disruptor versus the incremental improvement, I suppose, is maybe kind of what it breaks down into, and which do we need both? Should we be doing both? Should we all put chips in the transformer versus the trinket? What do you think?
So I think the transformers have been vividly obvious and apparent in many industries. Now, if we think of the Airbnb, if you think of the Ubers, if you think of the Amazons, like it or not, think of WeWork. It may have lost 99% of its value, but it really shook that industry up in a big way. And it may ultimately be a disaster and may go bust, who knows? But it was transformative in the way it approached that business. I have to say, I don't really see a transformative company at all in insurance. If we take the classic example that's always put up is Lemonade. But Lemonade's sort of like pivoted its business model every year or two since I first met Dan Schreiber and the other guys who set it up. Because it started off peer to peer, and then landlord renting, and then all sorts of different things, and like we'll never take capacity from the market, and now it's got Swiss Re backing it, and all these different things. And we're not going to license in every state because that's not needed. Now we're licensing in every state. So it's sort of
not going to be by a broker. They're always going to be direct, and they've got a massive broker business. Yeah.
Yeah. So I'm not criticizing the guys because you do what you need to do to stay in business, but it's essentially and grow that business and be successful in that business. But essentially, it has not transformed the industry. If anything, it's transformed itself to look more like the existing industry. So far as I'm concerned, I haven't really, and I could be missing it because I'm not looking at everything. And some of the companies you mentioned earlier are getting close to this. The Joannes are getting close to this, but I don't really see a transformer in the insurance sector. What I'm seeing, and don't get me wrong, there's some very, very successful insure techs, but they are in the majority of cases, it's difficult to tell the difference between those insurtechs and technology service providers that were around in the year 2000 before the term insurtech was invented. So they're essentially technology service providers. They've just got a sexier badge now. They can call themselves insurtechs, and that gives them access to VC money. So I'm not knocking that. I'm not saying it's bad or wrong. You know, and it's the old expression which is always true and always remains true in my view, which is, who made the most money out of the California gold rush? It was the guys who were making and selling the shovels. And if you're the guy who's making and selling the shovels in the insurance industry, that's an extremely important role. That's a very, very important role because the insurance industry per se, for all the reasons we talked about earlier, has been very slow to transform overall. So I've got huge respect for the Bolt Techs of the world and the other big guys like that who've really made a big difference. But are they transforming insurance as an industry? Well, not yet.
And is there anything specific about Steve about Bolt Tech? And we obviously looking from the outside, they've seen what they've done. Obviously, enormous venture capital rounds, and obviously there's a evolution from an existing business. It wasn't kind of completely net new. It was an existing business kind of split out and been an insurance arm. Is there anything that you've seen that business specifically that they've done really well in getting the growth that they've achieved?
Well, I'm not super familiar with their functionality, but they're very focused. They're very client focused. They know what they're going after at their clients. They target the big names that we talked about before, and they deliver what they promise. So it's like the other good vendor, any good supplier. If you deliver what you promise consistently and the price is reasonable, then you're going to be successful. But I think it's that vendor relationship rather than and there's a lot of vendors out there. It's you just got to be consistent in what you do and differentiating your product suite as best you can.
I could talk to you absolutely all day, but I'm cognizant of your time. So if I've said everything, I'd like to wrap on a final question, which is about the future of insurance. Obviously, we kind of talk here about the building tomorrow's insurer, and we think a lot about the future. I'd love to transport your 10 years. You and I sat down having this conversation in 10 years' time. What do you think that future of insurance looks like? Is it markedly different from today? What does that look like for you?
I think that's going to very much depend on the regulators. It'll depend on what they permit to happen, and certainly in Asia, across many jurisdictions. My concern is that the insurance industry has traditionally been weak at explaining how good it is, why it brings benefits. I mean, to my earlier point, the insurance industry arguably is the only bit of the financial services sector that's not a parasite. Everything else is just a complete parasite on the rest of us. The whole of financial services, banking, loans, all the rest of it. Insurance can be fundamentally life-changing, but we don't market ourselves well at all. My worry is that you mentioned Alipay, people like that. We just become a function of other parts of the financial services industry. If we become embedded to death and we lose the customer relationships entirely, then there's a huge risk that the insurance sector as a whole just becomes a bunch of dumb pipes providing capacity. And most of us who've had that wonder of providing service direct to customers and seeing customers' lives and companies improved, we're going to lose that because that'll now be done by an app sold by a bank.
Interesting. The regulators have got a lot on their plate and a lot to answer for. Steve, this has been absolutely wonderful. I really, really appreciate your time. The insight has been fantastic. I'll continue to follow and watch all of your content. And so thanks for everything you're doing. Thanks for all the work you're doing in climate, and really looking forward to kind of watching progress over the next couple of years.
Thanks very much, Nigel. It's been an absolute pleasure.
Well, I hope you enjoyed the episode. I absolutely loved it. It's a fantastic one. If you want to see mine and Steve's faces, make sure you do jump over to the YouTube channel. You'll see the link in the description below. And as always, if you'd like to hear more from industry leaders who are pushing the boundaries in insurance, please do check out other episodes of our podcast series, Building Tomorrow's Insurer. Steve, thank you. Have a wonderful rest of your day.
Thank you.